The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 26th, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. And if you can't dial in, we've got you covered. You can just let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 100 points, even Steven. 25,516 is the print. The S&P is off 8.5 points. The NASDAQ 100 down 110. Russell's up 6. Semis are up 17. Trannies are up 100. Spot volatility index is up 19 pennies. Trade at 12.48. Gold's back $6. Silver down 10 cents. Light sweet crude up 39 cents. So we've got things to look at. Leading the charge to the upside, it is John Bean Technologies up $21 or 22%. Roper Technologies up 13%. It's the technology company. Well, we can't say that's to the upside. Facebook to the downside. Super Valuing, that's up $12. West Pharmaceuticals up 11. Charter Communications up 11. To the downside, it is Amazon dollar-wise leading the charge off $57. ABI, I forget how you say this name, Biomed. ABMD, that's how you say it. That's a ticker symbol. That's off $44 or 10%. Facebook down 20%. That's $40. Biogen off $40. So there's some romping, there's some rocking and rolling out here. Mohawk Industries getting a big haircut, off $36, down 16% out there. And we've got Jim on the line from Palm Harbor. So we go right to our callers. You've got priority seating here. In this case here, Jim, you want to talk about Amazon. First, thanks for holding, thanks for calling, and tell us how we can help you.
Well, I was just curious what your thoughts were on Amazon. It reports earnings after the bell. They've got some trucking strikes in India that are hindering deliveries of Amazon products, and I don't know what all might be going on with it, but it's down quite a bit in sympathy, I guess, with tech and Facebook.
Yeah. So are you in? Tell me what you're trying to do. So we'll go try to do an analysis. No doubt we'll do that. But are you in a position, looking to get in a position? What's your thoughts here?
Well, I was wanting to increase my position. I've been holding just 15 shares for a while. And
okay,
but I'm going to keep holding it, I believe. So I'm just curious about whether I should maybe get some more, but on this pullback.
So I'm going to say at the moment, here's what you're going to wait for. So you're looking to add to your position. They've got earnings, this evening. You're already in the stock, so there's no. And I know you want to, as you said, you wanted to increase the bet out here. It's trading. So here, and I apologize because I'm literally just getting into the saddle here. I've been gone all morning, and my system one of my systems isn't completely updating charts out here, but that's okay. We can still figure out what's going on. And what I wanted to share with you is we can see that Amazon had been pushing higher, doing it with less relative energy. It formed that Tom DeMark setup, a 9 count. This is about 4 or 5 trading days ago. It's trading back inside its daily box out here. So this has this suggests a couple of different things after the bell. So let's take a look at the downside out here. The first downside would be price coming down to 1782 and 15 cents. That's the bottom of its market profile. If it closes below that level, then as far as where you're going to add to your position, you're going to be looking at the trading day of July 6th. You're going to be looking at the level of 1691.67. Those would be the places. Now, it may take off without you, right? So the upside, you're already in a position. And even though you'd like to press it, I would say there's too many signals here at the top that say, you know, hold those horses just yet. And because you're looking to add to your position out here, let's wait to see what happens after the bell and then monitor what is the price movement to the downside. You just never know, right? So I mean that's my take when I look at it. On this other chart here, my chart that has Stevie's red line, Jim, that was priced in essence yesterday at 1835, and we know we're trading below 1835 right now. And so whenever you trade below Stevie's red line, that suggested a further pullback. Could be in order, maybe more than that. That's why I just look to the two most logical places for a pullback in Amazon. And I just don't see a reason here to like add it right now at 112 in the afternoon.
Okay, that sounds good. I was real reluctant to pull the trigger. It's not down really that much in the big scheme, long-term scheme of things. So
no, it's not. But there's a little bit of volume behind the move today. So, you know, sympathetic. Look, it's inside the NDX 100 out here. The hit that Facebook has had, you're going to have a lot of reshuffling that is either been done, is being done in all kinds of ETFs out there that have a heavy weighting with regard to Facebook out here. So, you know, that may be a reason why Amazon isn't doing too badly today. You know, you'd have to really go study all the different ETF structures out there. But at this stage, the volume on the move lower is 4.7 million shares, and yesterday it was up with 3.8 million shares. You know, and then the last time it was down here, where it's trading into just a few days ago, on July 23rd, that only had 3.8 million shares. So it's a swing point nonetheless. But Jim, it's pushing lower with volume. And so just based on everything we've looked at, I just think the more prudent thing for you to do is to wait and see how this responds to earnings out there. Now, you know, they can't change their financial statements, I don't think, at this late stage of the game based upon Facebook out there. So I don't, you know, they're not going to, their accountants aren't in the back taking a look at what's in their drawers to pull out and increase, you know, net income. I wouldn't think they're doing this at the last minute, but in fact, they're not. There's no way. There's no way they are. So I would just sit tight, okay? Because, yeah, that's what I would do.
All right. Well, I really appreciate your input. I really enjoy your program very much. Thank you.
Well, thanks. We enjoy you listening. Thanks so much for calling. That was Jim in Palm Harbor. Hopefully, we've given him the right advice on Amazon. This is Steve Rhodes with TFNN. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 120, S&P down about 7. The Russell 2000 up 6 points, and that leads into our question here from Jay. So Jay writes in and says, is there a price that you would go long the IWM, the Russell 2000? And so, Jay, to answer that question, I'm not going to focus so much on the IWM as I am on the futures contract. The reason is because I think if we just focus on the ETF structures out there, we're likely to get what is that bug out there? What's that bug called? The lack bug. You familiar with the lack bug? Especially the female version of the lack bug, the ones that come from Thailand and from India. And what I don't want you to do is they're the ones that produce shellac. And I do not want you to get shellacked out there. And I'm afraid that if we just simply I'm not afraid, I know. If what we do is we just base our trading decisions on the index ETF structures out there, we're going to get shellacked. And I do not want you getting shellacked out there. So what we're going to do is we're going to focus on the Russell 2000 equity futures contracts. Or contract, I should say. We're just going to look at some multiple time frames out here. So what we would be looking at first is we're going to take a look at the daily. Now, this chart, hopefully, Jay, you're watching us on Tiger TV, and this happens to have the daily time frame charts with their TAS market profiles. That's where we're going to begin. For the ES Mini, the NASDAQ, the Dow, and then the Russell's the very right-hand panel. And what you're noticing here today is that the move higher that you saw today, intraday, what it did was it ran right up to the top of the box. Now, the top of this daily profile, its resistance, is 1708. The high today is 1707.70. That qualifies as getting up to resistance, and since then, it's pulled back. Now, hasn't broken through a level of support, but 1685 is the first area of possible support. So right now we're trading at 1695. Would I add that? Would I add it if it hits there this afternoon? No. What I want you to watch for, and I'm going to kind of go through this step by step out here with you. Is that at first you'll see, Jay, you've got 3 lower highs right now. So yesterday's high was a slightly lower high than the one from July 10th, which was a lower high from June 21st out there. Now, nothing has fallen apart, but you do have those lower highs. That suggests, okay, we have a further pullback. So 1685 is one of those levels. That is the daily area. Here, if we pull over Stevie's daily time frame chart, what we're going to see is it has that topping pattern that you have to be aware of, because these are the types of signals that suggest there's going to be some type of pullback. Now, we haven't really had that yet on the daily time frame chart from the time period that this pattern formed. And it formed with that good old bearish engulfing candle. And not only did price test and reject the top of its daily profile, Jay, it also is testing Stevie's red-green line. I was speaking with a client yesterday, and he said, you just ought to name this the Christmas line now that you've got it red and green out there. And if that doesn't offend anybody, I like that out there. But it ran right into resistance of Stevie's line. And so now you have another secondary level of resistance out here. Still might be the 1685. But, you know, if we were interviewing Lee Corso, he'd say, yeah, not so fast. Why don't you go see what's going on a weekly time frame chart? And on the weekly time frame chart, you can see the range that the Russell 2000 has been within for the last 1, 2, 3, we're going to call it 4 weeks, certainly the last 3 weeks, but 3 to 4 weeks out here. And let me just go ahead and expand this chart. And that level is 1660. So at 1675 to the 1685 level, there's support. That's the center of the weekly box. It's the bottom of the daily box out here. But clearly the top has been resisted. And it's strong support, should be strong support, meaning 1660. So if you're going to ask me, what you did, where would I consider adding? I would be looking at the price of 1660. I'd like to see the Russell 2000 equity futures contract get down there and test it. Now, maybe that happens during the trading session, and then you could pull the trigger on the IWM. I still think you have time at this stage, and I think that it's important for us to watch what really happens inside the NQ. Jim called about Amazon. And so we're going to need to see how Amazon and Apple, I think we've got to get through this. I'm going to show you the reason why. But one of the reasons why I think you've got time, potentially time, inside the Russell 2000 is because it's not as if, where did I put that? It's not as if traders around the globe right now are saying, hey, you know, I don't know, Facebook, schmacebook. And I don't know if that's exactly what they would say, but as we take a look at the Russell 2000 priced in euros, priced in yen, priced in Great British pounds out here, we're not seeing anything break above any prior swing points out here. So even it too, in essence, is making a series of lower highs out there. So since that's on the screens of traders around the world, that's why I say, okay, we've just got to be patient. Now is not the time. I've given you the price areas to be looking for. If those price areas fail, then we want to come back and take a look at other areas out here. And now to just kind of step forward into why I believe the NQ is important to be watching is because this could be, may not be, I don't know where the NQ finishes the day, but what we can see is that if it finishes below 74.32, that's Stevie's Christmas line out here, that's the green line right now, tells us we have a rising price oscillator above zero, which means when price is below that says you have a further pullback. Well, inside the NQ, all right, if shareholders are giving Jim in Palm Harbor and you and I some type of signal as to what's to come, no matter what they report, we're going to see Amazon sell off and move lower. Right now, you've got the bearish reversal candle. The question is, does Amazon only push lower to 1782, or does it push lower than that? So here, and that's going to be important because if it pushes lower than that and the NQ today finishes below Stevie's green line, well, then what we're looking at, and this helps to answer Jim's question as much as yours, it may not be till the NQ finishes its pullback. And its pullback on a daily time frame takes you back to July 2nd out there. Yeah. In fact, it takes you back to the July 2nd lows. There are other intermediate stopping spots, but that is what I would be looking at out here. So you don't have the bearish reversal signal here in the NQ, but we do have one in Amazon. And so I think you just have to sit tight. If I take a look at what traders around the globe are doing with the NQ, it's really not that bad. So it's not as if traders around the globe trading the NQ, in essence the NASDAQ 100, have given up the ship here. What do I mean by that? Take a look at panel number 2, or forget panel number 2. Let me just expand the panel. Now what we can take a look at is how the NQ is trading in euros. And you can see that it, made another attempt for its highs today. Hasn't broken through a swing point really of any significance. For me, that takes us back to July 16th because of such a wide breakout inside the NQ. So here's the bullish side of the let's say the Amazon trade or just the NQ trade out here, is that traders around the globe, maybe they're the ones, or at least with regard to those who trade the NQ in euros, they're saying not so fast to the downside. In the case of yen, it's not as if it hasn't busted really through any swing points or anything. And the same thing in Great British pounds. So it's going to be an interesting afternoon, early evening, tomorrow morning out here. We've got sort of conflicting messages out here. But to answer your question, Jay, just be patient. Let's see if price continues to pull back in the Russell 2000. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And I am a soothsayer out there, and I know that somebody was asking the question, and I heard it. Said, well, what happens if the NQ closes above your Christmas line out there at that 71.32? Then the market remains bullish, and then I would be leaning towards, well, looks like Amazon might, in fact, surprise to the upside. out here. But you've got to close above it. And look at what, just take a look at Stevie's red/green line out there. I could just keep it red, and then we could have just the solid red and then the dashed red out there, or the dotted red, or in any event, we're calling it mean and green. Take a look at how many times, well, really, since July 11th, prices come down, tested it, and then it's boinged off of it and moved higher out here. Today could be the first day where it doesn't. That's why it's really, it would be like it is a signal. Then I'll get it out. Don't worry about that. It is a signal that there's a change in trend, a potential change in trend. Now, that change in trend, it could be nothing more than just a retracement, nothing more than a pullback. So the soothsayer was able to anticipate the question. Well, not anticipate, because I heard somebody ask, and then I went ahead and answered it. Now, I haven't spoken about Facebook. We haven't looked at Facebook, and there are probably folks out there that are wondering, well, what's Facebook doing? So let's go take a look at Facebook out here. Well, first, it's moving lower with some big volume behind that move. But what does that mean? Where's Facebook likely headed to out here? Well, as we did, volume behind the move today, 126 million shares. Probably one of the bigger volume days out here. Is it the biggest volume day? I don't know. Yeah, it looks like it so far, but I haven't pulled this. But that was 129 million shares back on March 20th, but we're already at 126. From a daily time frame standpoint, what if I just gave you this chart out here? I'm just going to do this. I'm going to turn off the market profiles because we know prices below those. But if I turn those off on a daily basis, and you look at this chart, where is it that you would say that Facebook is pulling back to? Where's that level out there? Just visually, you look at this chart and you say to Steve-O, you say, Steve, gaps to the upside. Gaps to the, yeah, that is an island top. That Tucker is correct out there. This probably is one of the largest island tops that I've ever seen. How about you, Tuck? Have you seen an island top any larger than this one out here? Which is a bearish pattern out here. Okay, there you go. So there's all the people that bought Facebook on the trading day of July 24th and then yesterday, July 25th. They are stranded. Worse than Gilligan's Island out here. But when you see a bearish signal, the first thing you have to recognize is, well, where's support out here? And irrespective of today's trading, where would you have identified support to be? You know the answer to that. It's where we see the last sign of strength and gap to the upside, because gaps are our friends. In this case here, that's what it is trading down into. Now, what we don't know is whether price is going to find support at 170.80 or whether it's going to find support at 160.106 or none of or neither of those areas. But right now, I would say Tucker, who spotted that island top out there, by the way, so he gets credit for it. I didn't see it, but he saw it. That's why we've got wingmen, and wingwomen here at TFNN. I would say pretty good odds Facebook is headed for that breakout area. Now, albeit it's coming back there with volume, but tomorrow could be much lighter as it approaches that area. The volume on that breakout to the upside was 77 million shares. So the first place to be looking, I'm not suggesting that you buy Facebook. We're just looking at where is Facebook likely headed to on the daily time frame chart, getting rid of those profiles. 161 to 170, that is what you said, and I agree with you completely. That's the first place that you're going to look at for Facebook to try to find some support. So let's just leave those red lines, that gap to the upside in there, and let's switch over and take a look at our weekly time frame chart. Now, our weekly time frame chart, big, huge weekly bearish engulfing and key reversal, no question about that, but still trading above the top of its weekly profile. We know the top of the box, 171.27 is support. 171.27, 170.80, pretty close to each other. If that doesn't hold, then you've got the center of the box, bullish structured box. That would make sense on a weekly standpoint, from a weekly standpoint, as to where Facebook would pull back to. 160.14 is that level. Well, 160.14 or 161.06, really in the range out there. And if those levels fail, then what we're looking at is a price point of 152.73. At this stage, even with the big volume out here inside of Facebook, I'm looking at I'm going with the 160.14, the 161.06 to the 164.34. That's the range where Facebook ought to find support. 164.34 happens to be the bottom of its monthly profile. So that's what it looks like to me on its charts, irrespective of the fact that it has an island top. And we're not going to say, okay, that's it, it's done forever. It could be done for a while, that's for sure. But let's watch. We got to watch this over the next couple of days out here for sure, and we'll watch those areas. So that's what's going on with Facebook. Who else is coming out with earnings? Is Apple, guys, gals in the den? When's Apple come out with earnings? I know I should know this, but I don't know this. Is it this week? Usually they come out on a Thursday, but I don't, and maybe that's not even correct out there. And I'm sure there's a way for me to look it up, but hey, regardless of whether I go look it up or not, let's just go see, what's Apple doing out here, right? The next biggie to potentially crack or not out here. And, well, not showing any chinks in the armor, that's for sure. Traded higher today. Yesterday, the volume in this was 17 million shares. That was taken on 21 million shares. Really no big deal out here. From a weekly perspective, it's light the loafers, that's for sure. But it's summertime out here. Not seeing any signs of any reversal or any problems here in Apple as we speak right now. Now, there was a question earlier that came in from I forget, but somebody who asked me to take a look at the mining sector, the GDX, the Nugget, and gold out there. So they're expected the 31st. Thank you, Z. So today's only the 26th. So I guess that's the 31st. Is that Monday or Tuesday? One of those days out there. So not till next week after the close. Thank you. So let's go take a look at the mining sector. And in order to look at the mining sector, we're going to go take a look at the gold first. So if we take a look at gold, trading back $6.80 out here. If we look at Stevie's, now the gold contract rolls here. Z would know this. This rolls between now and July 31st, I think, right? So it should be rolling July 30th probably. Should be rolling pretty quickly. So when we have a contract that's going to roll, what we like to go to is Stevie's synthetic contract out here to look at its profiles. And the only place where I can do that happens to be on the Z-Signal platform out here. I can't even get those symbols to port over into my NinjaTrader system, so I've got to go with the current contract inside those systems. Hey, you don't need to hear any of this. What you want to know is, well, what does your synthetic contract show in the case of gold out here? So as we take a look at it, I just have to find it. Where is it? Here we go. Here's the gold contract down 670. It's really the daily time frame. That's the one that you and I are focused on out here. And again, another day, another dollar. But in this case here, another day and another dollar where it couldn't bust through 1238.70, the bottom of its daily profile. That just is not good. Cannot get above resistance. Something to think about. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So we're ripping apart Goldilocks out here in order to take a look at what's going on inside the mining sector, GDX, Nugget, and so forth. And so we've established that and look, these TAS market profiles, very cool tools to help you identify support and resistance. You get the chance to see this from 1 to 2 each day, and newsletter subscribers get various different profile levels for different instruments each morning. And what we can see here with regard to gold is that it has been unable to close above the bottom of its box. This just keeps chugging into resistance. Eventually it'll get tired, right? If it can't get back up above resistance, it's like, it's like climbing that wall. You can't get up on the wall. Eventually you're going to, okay. And here is the yin and the yang. Which one would be bullish which one would be bullish, yin or yang? Out there. Well, I'll let you figure that out. But we're looking at the yin and the yang, and here comes the other side of either yin or yang, and that's a daily contract. Again, the daily contract, nonetheless, using Stevie's Rhodes Momentum Indicator signal. And we pointed this out yesterday, how gave you a nice bullish signal to confirm, not complete, but to confirm the pattern here on the trading day of July 20th. Now, when something confirms, I like to see follow through. There was no follow through on the next trading session, and price ran into resistance. We have established that. What happens yesterday? Another bullish signal. You like to get follow through. Do we have follow through? No. Is price still above Stevie's red line? It is. But we know that it can't break through resistance. I don't know if support is going to hold. In this case here, it's 1222 would be Stevie's red line support, but I'd come back to the actual low from July 19th out there. But at this stage of the game, it's not looking really great. Okay, what's the next step that we have to look at out here? So bottom, potential, trying to form it, but the bulls just don't have the gusto. Well, what's going on around the globe, right? We always need to know what's going on. What does the trader, what is Stevie-san in Japan thinking about gold right now? What are my cousins over in Tokyo right now? Are they buyers of gold? Not enthusiastically, that's for sure. They're actually taking a look at their prior swing point at 137,000 yen for 1 ounce of gold, and they're saying, hey, nobody's willing to buy it. Nobody's willing to even get it back up inside of that prior swing point out here. So they're not enthusiastic. How about we got to come up with a name for Stevie in Europe? What would that be? I don't know. Somebody might. But in any event, the Stevie Jr. over in we're going to call Paris right now. I don't know why, but over here, hey, if you're going to hang out, that's not a bad place to hang out. You've got to admit, and good wine, and hey, how about those pastries? So if Panel 2, though, if you're just trying to take a look at what, gold is doing in euros, not much. It's not busting through lows out here, but there's no enthusiasm. And then if we take a look at what's going on with Stevie sitting over in London town, you're going to see it made a new intraday low, a fresh intraday low earlier today. So not enthusiastic with regard to traders anywhere around the world. And maybe that's really the story out here for those of us that really love the gold market. Maybe the story is that there's just not a whole lot of enthusiasm anywhere, which then means that a lot of what's going on inside the GDX is, to a certain extent, dead money. I'm starting to get closer and closer to saying, you know what? That may really be the case out there. Now, that is supported by more than me. That is supported simply by the charts out here. If we take a look at the charts, you can see that ever since November of 2016, the GDX has been trading in a sideways consolidation. It's a relatively narrow range, so to speak. The highs in the 24 to maybe 25 level, the lows in essence from the 20. So it's about a $4 to $5 trading range out here. Now, it's not that that can't be a decent percentage on a $21 type of stock, but we're not seeing breakouts anywhere. We're seeing a lot of sideways movement here. Granted, I'm looking at a monthly chart, but to a certain extent, to me, to Stevie-san, it looks like a lot of dead money. Or is it just me that's losing my enthusiasm with regard to the GDX? And maybe we ought to be looking elsewhere and spend more time elsewhere than we should inside of metals out there. I'll just leave you with this thought. Something to think about. With regard to the GDX, this thing probably wants to get down and test at least the bottom of its weekly profile. That's 2117. More likely, get down and maybe test slightly below that level. But look, if it busts through there, and all it's going to take in order for it to bust below this consolidation is for gold to finally give way. And so for those of you that are relying upon the U.S. dollar in gold, well, think again. You're going to have to get Stevie in Europe, Stevie in London, in Great Britain, and Stevie in Tokyo to join in on buying. And until you see that, it's probably not going to get a lot of movement. And those are my current thoughts with regard to gold. Okay, so I think we've covered that. Let me see if there's any other questions that have come in. Kind of a quiet day and afternoon out there. No problem. Must be putting everybody to sleep. So what are we going to look at next? I think we should go look at some of these stocks that are moving and grooving out here, because we've really kind of covered the markets to a certain extent. If there's a specific market you want me to look at, just write in. Give me a call. Send me a ping inside the Tiger's Den. Short of that, let's go take a look at Biogen, BIIB. Let's go see what the Sam Heck is going on out here. Not an island top out here, but moving lower. The daily time frame chart, you can see the bottom of its profile out here. The bottom of its profile, its bullish structured profile, is 334.86. Likely that is where price is headed to. No idea whether it will move beyond that. Now, if it gaps down tomorrow, it would create or could create an island top, right? It could do that this way. Tucker is saying, I know, again, Stevie the soothsayer, he's saying, hey, there's still room for a potential island top out here. That's what it would be. You would need to see this gap below, stay below, at least as of right now, 339.15, the low of July 10th out there. Not saying that's going to happen. Just saying something to actually watch for. At this stage of the game, price is moving back to support, 334.86. This thing had broken out on the trading day of July 6th with 12 million shares. You realize what it's pulling back with as we speak right now? 2.7 million shares. So I don't know if they released earnings, what the news was, but this is no Facebook. And I mean that. And I mean that in a big way. Just because it has moved lower, what you are seeing here is this is not moving lower with volume. And this actually is pulling back into a breakout area. Even if it doesn't get to 334.86, it's pulling back with light volume. So for those of you that might be, I don't know what percentage Biogen represents of the IBB. But on a daily chart here for BIIB, doesn't look too bad. I know you might look at the candles and so forth. If you didn't have the profiles, if you didn't have the volume profile as well to take a look at, you might come up with a different story. So just for blanks and giggles, IBB today, all it's doing is pulling back and testing support. The top of its daily profile, that's 116.98. Volume today is 1.6 million shares. Hey, when this thing broke out, it was with 4 million shares back on July the 6th out here. Doesn't look too bad, the biotech sector. Now, when it was pushing its prior swing point, which was January 29th with 2.5 million, it pushed higher with 4.6 million. Yeah, the IBB is going to be back up to those highs sometime soon. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So a couple of questions, 3 that come in when I only have 2 minutes. Hey, here's what we're going to do. We're going to first take a look at question number 1. This coming in from Tucker. He says, did we take a look at the VIX? We haven't. Your comments, please. He thinks it's napping. Hey, let me show you something very subtle out here, Tucker. And that is this. What you actually have right now inside the spot volatility index is a rising VIX index in the face of rising price inside the S&P 500. That's a divergence in the past that has always led to some type of correction. Now, I'm not saying the 10% correction. I'm saying a pullback, a retracement, or something more than just that. And you'll see some other notations on my chart. And if you just go back to the trading day, and we're looking at closing price, July 17th, you'll see it closed at 12.06. We haven't seen price close below 12.06 since the move higher in the S&P from July 17th. So you may think it's snapping. I think it is potentially sending a very important message that not too many people see out there. So that is taking a look at the VIX. We've got a request out here from Tim. Tim wants to take a look at THO, and the question is, has THO bottomed? And I think the answer to that, Tim, is no. THO. I believe we looked at this and suggested to hold back until price got a bit lower out here. I guess the target was 89. I think you've got to still sit tight. You've got a nice little bullish reversal signal today inside of Thor Industries, but it's trading back below the box out here, which is 92.55. And so far today, that's resistance. Closed below yesterday. Today, it's resistance out there. That spells some kind of potential trouble. If it closes below the bottom of its weekly box tomorrow, and that's 92.04, and you're trading 92.31, that says lower price inside of Thor Industries out here. And on a monthly basis, you know, this is going to be potentially month number 2 below the monthly. So I think we just have to come back and reassess Thor Industries, but thanks for writing in. The last one was with regard to Expedia. I guess they're out with earnings today. EXPE is the ticker symbol. Real quickly, what do we see out here? Prices above the top of the daily, prices above the weekly. I don't see anything bad from the standpoint of earnings necessarily, at least not at this stage, but we need more than just 7 seconds to do that. Hey, folks, thanks so much for being here. Stay tuned. Your favorite polar bear's up next. I'll see you on Fantastic Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.